Hi, this is Kathleen Provancher with Team Provancher, and I'm here with Shannon Pohl.
Hi there.
Tell them what you do.
I'm the branch manager and producing loan officer with Caliber Home Loans here in Vero Beach.
Which is, I think they're the second largest home lender in the U.S. Am I right?
We are a national lender,
Okay.
yet our offices are run very boutique and local.
Okay, but she's a local lender, okay,
Yep.
which is what a lot of the people that are sellers look for, which we'll talk about that in another video. But anyway, we wanted to touch base with her today, and I want to answer the number one question that people ask me. This is kind of like when I get in an elevator with someone, this is what they say. Is the market going to crash?
Well, in 20 years, so I've been through the ups and downs of the market. The interesting thing is, in 2008, when we had a crash, the inventory in the U.S. was over 3.6 million units.
Okay.
Okay. As of last week, it was reported that we have under 1 million units in the United States, like 991,000. Totally different scenario. That means prices will likely sustain because the demand is so great. Totally different situation.
Okay, so then another question that they ask me is, I hear, so you don't think it's going to crash?
I don't. I do think that there could be some troubled times. People are going to have to deal with insurance going up.
Yeah.
Rates are now going up, but it's a much more sustainable market, even though it's got its own challenges.
So sometimes I hear people say, well, I even had one individual, you know who you are, that I sold their house and they moved into a rental because they said in 2022, the rates are going to go crazy. They're going to go through the roof. And then that's going to make the bottom of the market fall out in 2022.
Right.
So what do you think about that?
So all the projections that we're seeing are that they are going to go gradually up, but I don't think it's going to be as dramatic. The Fed is going to stop buying mortgage-backed securities completely in March, so they're already started tapering, and we've already started seeing mortgage bonds go up.
Okay.
However, they're still historically low rates. We are still not even close to where we were even in 2019.
Okay, so you can still get, even though the prices are a little bit higher than last year, we still have great rates.
We have great rates, and we've got great lending programs. And what kind of the going forward from COVID, a lot of the lenders got more creative, and instead of bringing back the subprime mortgages, they are bringing back some flexible options that they feel more comfortable with.
Okay, great. So,
some that don't just fit in the box.
That's what I think is going to happen as well. I mean, none of us have a crystal ball, but that's what I have been telling people as well. In 2022, the rates are going to creep up a little bit. They're going to creep, but we are expecting as good a purchase market as we've had in the past year. Yes, and from my standpoint, I think the same thing that you think, and what you said actually mirrors what I think as well, because we have so many people coming into this area. And we're such a sought-after area in Indian River County. I don't foresee the people stop coming here from where they're coming from.
I don't.
Okay, well, there's your answer to, is the market going to crash in 2022?